Trading is so psychological, and what happens is your core psychological beliefs dictate how you see the market and what decisions you make. This is why we focus so heavy on the classes with Dr. Louis Aryaza, the compound psychology. It's going to get deep. And I want you to know that this psychology training is going to get really deep, and it's going to take time, because we have to go into your inner core beliefs, identify issues that are inside your core beliefs, extract those, and then recondition your core beliefs so that you're set free from sabotaging yourself. A lot of you believe that you're cursed. A lot of you believe that you don't deserve to make money. A lot of you don't believe that you deserve to be successful. Now, not all of you. I'm not generalizing, but I know that just the human condition in today's society is one that needs to be overcome with your self-esteem. So if you beat yourself up, if you call yourself an idiot, if you've failed a lot in your past, if you've lost a lot of money in your past, if you've failed at a lot of projects in your past, that is going to create baggage in the way you trade, because your confirmation bias, meaning what you already believe, will dictate how you see things and how you behave when you look at new things. So that means if you have a core belief where you believe, you suck and you're an idiot and you don't deserve to make a lot of money and you've failed a lot and this is probably just going to be another failure for you. And it's like your logical conscious mind is saying, no, this is my chance for a breakthrough. But then your deeper subconscious mind is saying, no, this is going to be like everything else. This is pie in the sky. It's too good to be true. You're not going to make this work. This is too difficult. It's too hard. You can't learn this. You're not good enough. It's too expensive. You don't have enough time. All of those core beliefs will kick in, and it'll dictate your behavior, and you'll actually commit errors, and you'll self-sabotage, and you'll lose money, and then you'll get frustrated. Yesterday, I made money trading the alerts. I ended the day profitable. I shared that with some people inside of a chat. I didn't trade a lot. I think I ended up with like 7 trades for the day. I'm a pretty busy guy. But with those 7 trades, I made a total of about 3.54% profit on my account. And I had a total drawdown of 2.2% drawdown on my live account. And people were showing me their trades. Some people, there was some people that had way better days than I did yesterday. Some people made like 10% on their account. But some people lost. In fact, a good number of people lost money. And you have to ask yourself, if 2 people are trading the same thing, but one wins and one loses, and it's the same system, then what's the variable, right? When you're troubleshooting, when you're trying to improve something, you always have to ask yourself, what's the variable? The variable is the human factor. And I want you guys to accept that. If you're new to trading and you want to get better at trading and you want to become profitable, you have to take responsibility for your results, period. Okay, watch. I'm going to show you that, guys. Here's our disclaimer. And this is because of you've seen disclaimers a million times. A lot of you tune this part out. Don't tune anything out that I'm saying. Do not allow this to go in one ear and out the other, because it's not going to change you. If it just goes through you, then it's not going to change you. This needs to stick. Okay, this right here, we show this on every call because it's the reality of the situation. This is a manual trading tool. All alerts are uniformed for all subscribers. They're uniformed. That means we all get the same alerts. Now, if you have the actual Scalper software, which many of you will have after we launch, you get more alerts, of course, because you have unlimited access to all the charts. And eventually you'll be able to change your settings and change the way you get alerts, right? There, of course, you have more access. But the alerts that do come in on Telegram are coming in from the software. Now, quick disclaimer, we are troubleshooting There's some type of glitch with Telegram. It's only on a few alerts, but there's a glitch where some of the alerts do pop in and they're not being generated by the software. And we're, our team's troubleshooting as to why some of those alerts pop in. We're not overly worried about that because number one, if you're following the system with the proper risk management, even a bad alert shouldn't affect you, period. Number two, they're easy to identify. You just look at the price on the alert. The alert shows you the price of the instrument. You go to your chart. If you're like, whoa, that price does not line up at all with what I'm seeing on my chart, well, then there's no reason to take that trade, right? You gotta be aware. You gotta pay attention. So quick disclaimer on that. We're going to continue monitoring that. We're trying to just open this up for you guys to see how powerful it is. I think that you guys have already seen the power of the alerts. Friday was incredible. Yesterday was more choppy, more of a ranging market. Today was more of a trending market with some superpower alerts that came out. And that's what you're going to see. You're going to see some days are choppy and rangy. Some days are trending. And there's strategies for both days. And that's what I'm going to teach you today. I'm going to teach you how to manage your trades, or the different ways you can manage your trades based on the market condition or the market structure, right? And this is something that you want to learn. But the point is that we're all getting the same alerts. And that's why we say that on the disclaimer. And so if you're getting different results than someone else, then you know that you're the one creating that difference of results. Even on today's morning call, look at how different the results were. Some people didn't take a trade. Some people only made 0.5%. Some people made 1%. Some people made 5%. Some people made 12%. Again, it's one call. We're all looking at the same thing. Why are everyone's results completely different? Because everyone has the power and control to manage that situation how they deem fit. Our goal is to equip you with knowledge so that you learn to manage these situations successfully based on a proven system, and it takes time. Now, trading is risky. You take each trade at your own discretion. Your results will vary. We do not guarantee results. The information that we provide is for educational purposes only, right? We don't give financial advice. This is not a solicitation to invest. Now watch this. Each trade is at the full discretion of the user, and users are fully responsible for their trading results. This is not just some cliche, right? So if you're serious about this journey, do not question the system, period. Don't question it. When I see a new person who's never made money in trading, and I've been trading for 8 years, I've been full-time for 3 years, and someone comes and says, oh man, I'm taking all the alerts, I'm following the system, and I'm losing money. Really? Wow. How is that possible when I'm taking the same alerts as you and I'm winning? Right? Do not question the system. If you're serious about this, question yourself. You don't want to start off with an assumption of like, oh, this is broken. No, it's not broken. People are winning every single day. I'm winning every single day. The system's not broken. You're broken. Oh, that sounds kind of harsh. Well, we're all broken when we start trading. You're broken. So you need to start with an assumption that maybe because you're new, there's a very high probability that you're doing something wrong. And you think, gosh, but how am I doing something wrong? I get a text message and then I click a button. Yeah, it sounds pretty simple, right? And I use the example in the morning. Some people said, gosh, that was a great analogy. It's like when we're shooting a basketball. Sounds simple. Hey, here's the ball. Shoot it. Go put it in the basket. How come you have someone like a Steph Curry who can shoot a ball from 60 feet away and sink it over and over and over again with consistency? And then you have someone else who, with the same ball on the same court next to the same hoop, can shoot from 5 feet away and miss 10 out of 10 shots. It's the same ball. Is the ball broken for that person, but it just somehow magically works for Steph Curry? It's the same ball. It's the same hoop. It's the same court. Of course the ball's not broken. It's the way the person's shooting the ball. And I want you to understand that's why we say trading is dynamic. Yes, it actually does matter when you click the button. It also matters what decisions you make after clicking that button. And some people, just so you know, let me say I love people, and we're doing this because we love people, period. We believe in people. we know this is going to change people's lives in a very positive way. So when I speak some of these things, I'm speaking out of love. I really am. I'm speaking out of an intention that I'm here to help you. When some people show me their account and some people are saying, gosh, my losses were too big today. I can't afford this. Okay. Well, what does the last sentence of the disclaimer say that we read every single day? One should evaluate their own risk tolerance before trading and only trade with money you can afford to lose. Why are you trading with money you cannot afford to lose? You're ignoring us. If you've had a loss, now luckily most of the people I'm talking to, they're on demo accounts, which thank God that we tell people start with a demo until you become knowledgeable. So that's good that it's a demo account that most of these conversations pertain to, but you do need to treat your demo like it's a real account. Now, I'm not going to go down the rabbit hole, but some people believe you should just start live and go with a really small lot size on a mini contract to get used to the emotions of trading live because it is different than demo. There's validity to that. Our job is to just try and protect people and to minimize risk. That's our job as leaders. So that's why we do definitely advocate for starting with a demo account to practice, at least for a basic functionality. Like some people, they accidentally click a button and their trade terminal disappears. They don't know how to get back to the chart they were on. They're trading the wrong chart. They didn't even realize they're on a different instrument. I mean, those are functionality errors that you should not be risking live money when you don't even know how to navigate your MT4 application yet, right? That's why we talk about demo accounts. Psychologically, for sure, you're not going to get the same psychological benefit to trading demo as you do trading live. I can personally attest to that. I traded for demo on a demo for years, and I've traded live for years. And I realized that I had to go live to really make this work for myself, because I was more cavalier on a demo account. And that's the downside to trading on a demo account, is you don't take it serious. That's just human nature, because you know it's fake money. So you're willing to let things roll, and you start developing some really bad habits trading on a demo account that should never translate into a live trading environment. So that's something that you need to make a personal decision on trading demo versus trading live. I am thankful that some of the stories I've heard that they are on demo accounts. But my whole point is, if someone says, gosh, I lost this much money today and it doesn't feel good, well, then why are you trading with money that you cannot afford to lose? Even if it's a demo account, that's your fault. That is your fault. That's no one else's fault but yours. You're ignoring what we spend time reading and showing you every day. That's your fault. Okay? You should not trade with money, even on a demo account, that you cannot afford to lose. And we're going to get into some really, really amazing points here. So first off, let's talk about practical goals. What we're launching here, folks, is access unlike it's ever been given before. Our world is largely divided. And this is the big picture. You have to get this. Our world is largely divided, where usually 2 to 3% of all the, let me reverse the statistic. 97% of all the wealth in the world is owned by just a few percent of the global population. Think about that. 97% of the world's wealth, all the money in the world, is owned by just a few percent of the world's population. It's such a big paradox. And if you care to know why, it's because of the decisions that the two different types of people make. When someone is poor and they've been poor for a sustained period of time, it's because they make poor decisions. When someone is wealthy for a sustained period of time, it's because they make wealthy decisions. And those are two different worlds. One group has financial literacy. They understand how money works. One group does not, right? Which group do you think does not have financial literacy? All the poor people in the world. And largely, they don't even have access to financial literacy. And that's what I'm talking about here, is we're opening that door up. We're unveiling the secrets to financial literacy, unveiling the strategies to compounding, to open access and start offsetting that statistic and start changing that. And thanks to Forex, thanks to cryptocurrency, thanks to the internet, thanks to decentralized systems, that access is becoming more and more available to the rest of the world. Now, I say all that, I painted a real big picture, right? That there's a very small percentage of the world that are super wealthy. Do you know what principles those people live by? They operate under traditional compounding and investment models that are proven, right? A lot of people that are in the top 2 or 3% of wealth in the world, they would never try to earn 10% in a month or 20% in a month. They think that that's impossible because they've been trained on a system of, the rule of 72, that, hey, 10% a year, 20% a year, over generations of time in your family will create wealth. And they've been right. If you understand the power of compounding, then you understand that it only takes a little bit of a positive result over a sustained period of time to radically change your family's lineage. And so that's so critical for you to know, because some of you think you got to make 20% a day to make this worth your time. And you couldn't be further from the truth. I'm trying to get to the heart of the matter. I mean, some of you guys, I see you growing 20% a day and then losing 40% the next day. What are you doing? Like, why? Why are you, what's the logic behind those decisions? You shouldn't even be trying to do that. Don't be consumed with the deceptive lust of thinking you're going to be a millionaire by next month. That's not necessary, and it's also very unrealistic. Okay, so let's talk about setting some practical goals. Let's talk about how people think and behave that are wealthy. And this right here, this is the root of a lot of your problems, is that a lot of you lack financial literacy and you're swinging for the fences and you're risking way too much of your account. You're developing bad habits and you're trying to like knock it out of the park in a week and then judge the system and see, hey, does this work for me or not? Slow your roll. Slow your roll. I don't personally believe in the model of going to school, get good grades, go to college, get a degree, go get a career, go work for someone else for 40 years. I don't personally follow that model with my life, but that model has a lot of validity to it. There's a reason why a lot of university educated people, they end up with a good retirement in life because they took their time and they committed to something for a long period of time and they made it work for them and they built a strong foundation that became successful over time. That's the slow path to success, but it works, right? There's a reason why that works. And some of you think that in order to be successful here independently as a trader, that, you got to become successful in a week, when there's people that they pay tens of thousands, if not hundreds of thousands of dollars for education for years and years and years before they ever even get to a point of breaking even or becoming profitable with their career choices. And they end up very successful in life, right? The tortoise and the hare, folks. You have a strategy that can produce hare-like results, but you need to move at the speed of a tortoise because the tortoise is consistent, right? In that story, in that fable that we've all known, right? The tortoise and the hare, the turtle and the rabbit, right? You have a tool in your hands that is faster than a rabbit, but you need to apply it consistently and slowly as a turtle. That's the secret. Because if you apply it too fast, you'll psych yourself out before you even get started. This journey is super worth it. This journey will change your life. And you need to look at this. So question number one, how much time are you going to give yourself to become a master on your new journey? I've already seen some people, this isn't the narrative that I apply to everyone. Some people are like, gosh, I just can't get this to work. It's been 2 days. I'm out. Okay. Wow. 2 days of practice. Man, I'm sorry you didn't become a millionaire in 2 days. I'm sorry you didn't grow your account 300% in 2 days. This must not work. You need to If you're feeling frustrated, you need to stop trading. Seriously, stop. Just stop pushing any buttons, and you need to evaluate your plan. We've been saying this. If you fail to plan, you plan to fail. So I'm trying to take a step back. I'm going to show you some charts right now, and I'm going to show you market structure. I'm going to show you how to manage trades. But none of that even matters if you're coming in with terrible confirmation biases and a poor belief system, and you lack a plan, and you're just all rogue, and you're just pushing buttons and not listening to anyone. Then none of the strategy matters. The how-to doesn't matter at all. If you're not even disciplined and focused with the right mindset, it has to start with you saying, I'm committed to this for a year. I'm committed to this for 2 years. That's where it starts, so that you can take a deep breath. Like if you're feeling frustrated, that means you're trying to force your success. Trading doesn't work that way. It just doesn't. You can't force your success. Trading is another analogy, right? Trading is like surfing. A surfer who's surfing on the ocean cannot force a wave. If you make a profit, you can't take credit for that. If you lose money, you can't take credit for that. I'm serious. It's like, what do you mean you can't take credit for that? Because the market moved. You didn't cause the market to move. You have no control over the market. If you win a trade, it's just because the market moved and it went in your favor, but you didn't make it happen. It's just like a surfer. A surfer doesn't create the waves. A surfer's job is to ride the waves. Your job is to identify where the market's moving, and you allow the market to come to you, and then you ride that momentum. Some of you are trying to force the waves. You're a surfer paddling, getting all crazy and overwhelmed, getting all sweaty and worked up and frustrated because you're paddling and paddling and paddling, and there's no huge monsoon swell forming in the water. And it's like, what are you doing? You're literally going against the current. There's no wave right now. And I saw some people trying to trade things that weren't even the ideal times to trade. What do you expect to happen? Right? It's like going out into a lake with a big old long surfboard saying, man, I'm going to catch the next tidal wave. It's not going to happen. It's not available. You're in the wrong part of town, right? That's not how it works here. So if you're ever feeling frustrated, there's a high chance that you're trying to force something. That means that instead of letting the market come to you and riding momentum with an intelligent decision, you're trying to create a wave. It's never going to happen. Your job isn't to just go around clicking buttons and hope that you become a millionaire. This isn't gambling. This isn't a slot machine. This isn't blackjack. Okay, this is education. This is knowledge. This is financial literacy. This is risk management. And it's going to take time for you to learn these things. How much time are you going to give yourself to become a master on your new journey? How much time? For me personally, if you want to follow the leader, if at my age, I'm 37 years old. I don't try things for a month. I don't try things for 3 months. If I'm going to waste my time trying something, I'm going to give it a year or two at least to see, is this viable, right? If you want to follow the leader, that's my mindset. It's allowed me to become successful. How much is that going to cost you? If you stay in the program for a year or two, how much is that going to cost you? That's why I'm talking about traditional education. It's so funny. It's like unfair. Sometimes people are like I had a person. Now, I say this out of love because people are new. And when you're new, you're ignorant. You don't know what you don't know. And so I say this with grace. I say this with a lack of judgment. I had someone ask me the other day, hey, gosh, it looks like you need a bunch of money to make this work because it's unlikely that if you have less than, $350, you're not going to make all your money back in your first month. And it's like, why are you trying to make all your money back in your first month? That's not the way the world works. I don't know where you got that idea from, but that's not reality. That's not the way the world works for folks. Compare this is education. And so we are in the space of education. So compare this to any other education program out there. Show me one other education program on planet Earth where you're going to pay for the education and because of the knowledge from that education, you're going to make all your money back that you spent on the education in your first month. It doesn't happen. It doesn't matter if you're learning real estate, if you're learning e-commerce, if you're going to college and you're in medical school, it doesn't matter what you're learning. If you're paying for education, you're not going to convert that fee into profitability within a month. Now, what's powerful is if you run the numbers on what reasonable results look like in a year, then yes, trading can become profitable in your first year. That is miraculous because, again, you compare this to any other system out there. I personally don't know of any other system out there that I can pay to learn something, and then within a year of consistent application, make that profitable for me. Most businesses take 3 to 5 years just to break even, period. I mean, people, when you go to college, they pay so much money for college. It takes 4 years to get a degree. If they become a master's, it takes longer. And then a lot of people don't even go into the career that they studied. And it took a decade, 15 years, 20 years to pay off their student loans. I mean, you got to be sober-minded on how the world works. It's no different here. The difference here is that this is a faster vehicle. This is a faster vehicle, period. It's super fast. But don't get deceived over this unrealistic, I'm going to become a millionaire next month, because that's also not going to happen. Right? So you're in the fastest vehicle, but it's still going to take time. Right? Now, how much do you need to make in order to make this worth it for you? The cost of our program is going to be $599 and $199 a month. Some of you are trying to make $10,000 in a month. Some of you on your demo account have lost thousands of dollars on your demo account. Why do you have to lose? Why do you have to risk that much money if the cost of the program is $199? Why don't we start from there? Think about that. Why don't you start from there? Why don't you start with the cost of the program? Okay, $599, $199 a month. Okay, so you have to think, gosh, what can I learn in the next few months to where I can become skilled, to where hopefully I can start making at least $200 a month trading? Think about that. Some of you are trying to make $200 an hour. And it's so unnecessary, and you're going to ruin it for yourselves. Now, here's the thing. The way I look at this, like, oh my gosh, I'm a network marketer and I'm a trader. And so I understand these things. What's going to happen if you don't take a step back and reevaluate your plan and what you're doing here is you're going to demoralize yourself. Okay. In order for this program to work for you, it's going to work for me. I know that. It's going to work for Dr. Lewis. It's going to work for Ryan. It's going to work for Coach Mo. It's going to work for Bob. It's going to work for Vanessa. It's going to work for Omar. It's going to work for Davies. I know it's going to work for a lot of people. But in order for this to work for you, you need to have a conviction inside. You need to believe that this can work. And if you go and mess yourself up because you don't follow the system and you're just going and being reckless and rogue and gambling and trying to play luck, what's happening is you're going to demoralize yourself, even though we know this works. And then your belief level is going to be low because you messed yourself up. You're going to say, gosh, this is dangerous. I messed myself up. Oh, I don't know if I should introduce this to other people, because if I messed it up and I'm a pretty smart guy, then what are my people going to do? Right? Because we always think we're so much more intelligent than those around us, right? That's human nature. So my warning to you, if you're a leader, don't jump off the cliff by disregarding our system and then demoralize yourself. Like if you don't follow the system, well, that's your fault. We can't control you. You're not a robot. We don't want to control you. Right? But we're pleading with some of you to stop this vicious cycle of like boom and bust, and it's a $200 program that you feel like you got to be a millionaire in a month. No, you don't. Take your time. Relax. Right? You don't even have to take that many alerts to achieve your goal. We're going to talk about that. How serious are you about this? Right? How serious are you about this? We read the disclaimer. Do you ignore it or do you take heed to it? So I wanted to take a moment because I know it's like, just show me the cost averages. Just show me where to put my stop loss. No, it's not how trading works, folks. What's the point of going through all the technicals if you don't even listen to everything else we say, right? Take a step back, take a deep breath, and say, I'm going to give myself a year or two to figure this thing out. It's not going to cost you a lot of money. It's an affordable program. We're giving way more education and way more value than what anyone's ever going to pay for. How much do you need to make this work? The program's going to be $199 a month. You could trade literally a few days a month. And if you're effective, you can cover that cost in a few days a month. So don't try to make thousands of dollars a month and create some home run story where it's like, yeah, I became a millionaire with 8-minute trader. Don't go down that road, folks. This is a real skill. This is real education. and take it serious. Take us serious. Take our training serious. Take heed to all of our warnings. Every single word we put on these slides, we're not just trying to fill space. We don't just put words on the slides because we have nothing else to say. This is from blood, sweat, and tears. Blood, sweat, and tears. The system we put together is because we've had so many sleepless nights where we're stressed out of our minds because we tried to figure this out, and we know what's crucial and vital for you to make it work. So respect that. Respect your money, respect the markets, and respect all the work that went into building the system, and take heed to the things we share because it's all coming from a place of hard lessons learned. Now, understanding the scalper, the measurement is dynamic. It's not static. You know that. That means that depending on when you turn the alert system on, you're going to have different alerts come up than the person next to you. And that's a really cool thing. The scalper will measure your charts based on when you fire that system up, and it'll look different than the person next to you. As you learn to trade, you will find your own trading style. The good news is there's a lot of different ways to trade successfully. We will have a trade manager. These are just some things that I need to cover. We will have a trade manager. What is that? It means we're going to have a tool that you'll get into a trade by clicking buy or sell, and then you can set the settings up on how this tool will manage your trade, but it'll automatically come with stop loss, with a take profit, and we're going to keep optimizing that as time goes on to turn it into a trailing stop and then give you different options on how to exit your trades. Understand there's so much coming. We're doing so much for free right now. Imagine what we're going to do as time goes on and we develop our systems, how much better things are going to get, right? The future is really, really bright. Now, the most important thing that you need to do when you get an alert is to ask yourself what type of market you're currently in. And I'm going to show you two types of markets. And these are the two most common markets. And based on what type of market you're in, that'll determine how to manage that alert. That'll determine if you should close the trade quickly or if you should let it run, and how to tell the difference. So the first common market right here, it's called a ranging market. So if you're looking at the chart, a ranging market is where over a period of time on that chart, within that time frame, there's no clear direction of trend. That means right here, this is actual a screenshot from yesterday on US 30 that I captured. You can see the market came down, came back up, came down, came back up, came down, came up, came down, came up, came down, came up. Now, if you look, all this time has elapsed. And if you look at, this is hours and hours of information here on the charts. If you look at like right here, where the price was right here, it was the same price as over here. That means that hours and hours had passed and the price really didn't go anywhere. It just went sideways, right? And there's a lot of different ways to describe this market. Some people call it consolidation. Some people call it a channel. Some people say the market's moving sideways. Some people call it ranging. The whole point is we want to simplify this for you and just open your eyes to understanding when you get an alert, the first thing you should do is say, what kind of market am I in? Is it ranging or is it trending? That's it. And just and try to make an assessment based on just those two options. Is it ranging or is it trending? What does a trend look like? So this is a range, and then this is what a trend looks like. See the difference? This is today, right? And these days, I mean, the market open call was a cakewalk, crushed it. The alerts, a lot of the alerts have just crushed it because the market's been trending in one direction, right? And when you continue to see the same color over and over and over again, it's trending in a certain direction. It's easier to profit on days like that if you have the willpower to hold. And so you can see the difference here is in a very short period of time, the market just kept going and going and going in one direction, right? Today was very, very bullish. Now, we do like to say it's not about one day or 2 days. It's about what happened over the last month, because every day is different. And Friday was incredible because Friday was easy. Even for a new trader, Friday was easy. You almost couldn't go wrong, right? And you could have made money. Yesterday required more skill. in order to pull out some profits because the market was choppy. It was rangy. Today was another trending day. It was just easy. If you notice, every day is totally different, folks. Every day is just totally different. And that's why before you make a judgment on if this works for you or not, you need to go through a good amount of different days so that you have enough data to look back on and say, okay, now that I've been through a couple months, now how do I feel? What have I learned? And you have to understand that when you first start off, the results you get on a rangy or choppy market, or even in a trending market, if you don't know how to trade and it's going against you, you don't know when to close your trades, the results you get right now are not going to be the same results you get in 6 months from now in the same markets. I used to lose all the time in a rangy market. Now I know how to trade a rangy market and make money. I used to lose money in a trending market because I used to be stubborn and refuse to close my trades and then lose money. Now I know how to make money in a trending market. So even giving it a few months, that's still such a short period of time because your results within your first few months are not going to be the same results that you would get in your next set of a few months. Now, what I'm going to do here, I'm going to pause the share and I'm going to go pull up the actual charts because that's pretty much the best education is just going straight to the charts. Okay, so right now I have it pulled up on US 30. I want to show you, let's evaluate an alert. All right, so now the first thing I want you to look at, because this is the easiest thing for you to learn, are what's called the swing highs and the swing lows. The swing highs and the swing lows. What is that? What are the swing highs? What are the swing lows? Now, this is a 1 minute chart, and normally that term, swing highs and swing lows, is used as a reference on higher time frames. But just for simplicity's sake, I'm going to show you what it means on a 1 minute chart because I'm going to help you pay attention to a couple of things. So check this out. It's actually pretty easy. This is something that I don't need to draw lines on my chart, and I could see these things myself, right? So right now I'm going to draw a line on the chart. If you practice enough, you don't need to draw a line. Your naked eye will see this, and you'll know how to work with this. So I want you to see, if I were to draw one line that connects the bottom of all these candles here. In fact, that's a little bit, let me redraw that so that it's at a better angle here. There we go. I'm going to draw one line, okay, to connect the bottoms of these candles here. Now, this is a part of training on structure. Okay, this is the purpose of you learning this and seeing this on your chart is so that you know when the trade is going against you and you're losing, how much actual room you have to let that trade breathe until you're past the point of no return. And now it's just become a matter of luck. You can let your trades breathe more than one engulfing candle and it still be a valid trade to stay in. Okay, so what does that mean? It means that, let's look at an actual alert. Right here, this alert popped up by, right there, you see that alert? Now, which candle was that connected to? It was connected to right here, to this bull candle, right? It's the candle that goes right through the letter U on the word buy. It's right centered on the actual candle that it appeared on. And when did that alert appear? When this candle closed. So this would have been your entry right there on that alert. Now, if you would have got in right away, people ask, how much time do you have? It depends. I mean, ideally, you want to get in a trade as fast as possible if you're going to take that trade. Now, the more you practice, the faster you will get at making a quick analysis. I can look at a trade within 1 second and know if I want to get in or not in a second. Why? Because I've done it enough. When you first start, it might take you 5 or 10 seconds. And because you're asking yourself a couple of questions on, okay, what does the market look like? Is it ranging? Is it trending? Yeah, there's a little bit to learn. That's okay. Don't be afraid of learning. right? Don't be intimidated. Like, no, I don't want to learn anything. I just want to be blind and be a millionaire. Okay, well then this isn't for you, right? Everything has a little bit to learn. If you speak English, I could promise you that you could learn the system faster than how long it took you to learn English. And if you're really good at speaking English, well then you should have really high hopes on learning how to trade, especially with our system. So this is your entry if you were to get in. Now the question is where do you get out of that trade? Where do you get out? That's what makes all the difference on your results. That's what makes the difference. You could win a little, you could win a lot. You could lose a little, you could lose a lot. All of those possibilities exist on this one trade. It's the same alert, it's the same candle. But how you choose to manage your trade will dictate if you won money, if you lost money, and how much. Now, hopefully you're looking at this going, gosh, truthfully, I only need to learn to make about $200 a month to cover the cost of education and make this worth my time. So you don't have to worry and get all flustered, right, over, trying to have a home run on one alert. You're going to have millions of alerts coming in, and we're going to teach you how to cherry pick the very best alerts. Alerts are not meant to just go in and take every alert. We give you as many opportunities as possible so that you can take your time, have faith that, hey, even if I don't take this alert, it's all good. If I'm uncertain, don't take it. When in doubt, throw it out. When in doubt, throw it out. If an alert comes in and you don't feel good about it, don't take it. Don't stress yourself out. There will be alerts where you're like, man, I'm really liking this setup. This is such an easy setup. So watch the different ways of trading this. If you were to follow the one engulfing candle rule, you would have got out right there. And because of spread, that probably would have been a break even. Okay, because of spread, if you would have closed on that candle. Now, some people, including myself, they like closing pretty fast. I like closing pretty fast. I use different strategies at different times. Where I'm at in my own trading journey is I'm learning to hold on to my trades longer because I do really well, but I could do thousands of times better if I were to close my trades later. Okay, same risk management, but holding on for a longer period of time. A lot of times I cut myself too short, and that's not a bad thing. I mean, I do really well, right? So I'm successful. But I want to do better. It's always about growth and improvement. So you get in. Now, let's measure the market here. Let's look at some actual data. So I'm going to pull out the crosshair tool up here in the corner. I'm going to click right here. And what's the peak of that first run? There would have been no reason to close before this. There was nothing that happened within the first 4 candles that would have said, oh, definitely close before the first candle. Before the first 4 candles. So that was about $15, right? $16 of movement. So on a 0.01, that would have made about, at that point, that would have been about a $16 profit. A 0.02 would have been $32. 0.03 would have been $48, right? For every 0.01 that you add, that adds a multiplier of $16 to the trade because a 0.01 is for every $1 of movement on US 30, it's $1 of profit or loss. So this went up $16. And that would have been a $16 profit on a 0.01. Now, some people, they only want $10 of profit. That's okay. $10 is down here. Some people would have closed right here for $10. That's 100 pips of profit. That means a 0.01, you go in, boom, you take 10 pips. $10, 100 pips, right? Now, if you use the engulfing candle rule, you would have held on to right here, down here. Right? And that's about a $5 difference. So that's where it depends. It could have been a break even. It could have been a little bit of a loss. It could have been a little bit of a win. It all depends on how fast you got into the alert, right? And how fast you got in when the next candle was forming right here. When that candle was forming, I have no idea how fast that candle formed. Did it pop up here in 10 seconds and then just kind of bounce around here for the rest of the candle? Or did it stay really small down here for like 20 seconds and then shoot up? I have no idea, right? So I don't know where someone would have gotten in. It would have been around this point right here. Now, my whole point is what's your maximum threshold? At what point do you say, okay, I wanted to give it room to breathe, but now I know I have to close the trade? The easiest way to determine your maximum threshold of letting a trade breathe is just looking at the swing highs and swing lows on whatever time frame you're trading. So in this point, what are the swing lows? So I'm going to show you, I'm going to draw up, down, 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 up, down. In general, the market moves like that. Not perfectly, but in general. There's always high points and there's low points, right? Where there's pivots or reversals. So an easy way to look at the market you're in is look at all the high points. These are the swing highs. Okay, the swing highs, meaning the price swung up, and that was the high, because after that, it came back down. What are the swing lows? The swing lows are down here. That's where the price went down, 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 a bunch of bear candles, and then it turned around, it pivoted, and then it went up. Right? So knowing that gives you an idea on what kind of market you're in, and it gives you an idea of structure. So how do you do this? How does this work? Let me show you how this works. When I go to a chart, you'll get to this point, and that's why I encourage you, just practice. That's it. Don't be overwhelmed. Just practice. It'll get easier, like really easy. I don't have to draw lines to see these things on my chart. If I were to get into this trade right here, and it's going up, and then all of a sudden it goes against me, at this point, I'm in drawdown right here. I'm in drawdown, folks. So do I close? Do I let it go further than that? Well, looking at all the swing lows with one single line, look at all the swing lows. Here's one right here. Here's one right here. Here's one right here. There's no coincidence. That's what I'm here to tell you. These are patterns that are all over your charts. There's recognizable patterns that give you incredible important data on how to manage your trade. And if you don't know the data that you're looking at, then that means you're not understanding what you're looking at. Of course, you're going to fail because you can't even read it. So it's not a coincidence that you can draw one straight line and somehow it connects all the low points on that chart, right? Right here would be your maximum threshold of letting the market go against you. That means if you got into this trade right here, if it closed with a candle down here and started going down here, now all of a sudden the pattern that's been repeating itself over and over and over again is changing. If the pattern is changing, that means now you have no idea where the actual low is going to be, because the low is no longer following the strategy of all the swing lows before that, right? This was the low point. This was the low point. This was the low point. If it's no longer following that pattern, for me personally, that's my maximum threshold. That's where I say, okay, now I'm past the point of no return. I have no idea how far this thing's going to drop. I'm just going to close the trade. So there are times where I will hold on to a trade. Here, I'm in profit. I don't close yet. My profit starts to go away. Now I'm in drawdown. I'm losing. Candle comes back up. I'm still holding. I'm break even. I'm right here. I'm in a little bit of profit. Comes up right here. Now I'm in an even greater profit. Now I'm at 1, 2, 3, 4% on that trade. What's your plan? Now do you close or do you hold on longer? What's your goal? What are you trying to do? I don't know. Okay. Well, if you don't know, then how do you know when to get out? If you fail to plan, you plan to fail. Now look what happened when it came back down. You got this bull candle trying to bounce back off that swing low trend line, and then it finally pierced it. Okay, there's no coincidence that this little candle right here is a doji. What happens is when structure breaks, a lot of times, or when what you'd call change of character, it just means when the market goes from bullish, you see how this is bullish, it's going up, you're getting higher highs, higher lows, and all of a sudden you get a lower high, lower low, lower high, lower low, lower low. You see how you go from, this is called a higher high, higher low, higher high, higher low. That's a really simple thing to understand in trading when you're just looking at the points. And then all of a sudden it changed. Instead of going higher high, higher low, you started getting lower lows and lower highs. Lower high, lower low. And so it changed, right? That's for all of you technical junkies out there, right? What is that called? That's called a change of character, right? CHOCH, CHOCH, change of character. It just means that you're going from a short-term bull channel into more of a bearish pullback, right? So my whole point is this, folks, is that you can take cost average trades as long as they fit within your risk parameter, and you can hold on to a trade viably with validity as long as it's still within the pattern that you're seeing. You're like, yeah, it keeps bouncing up on that one line. Okay, well, if it hasn't passed that line, that means it's still within structure. So you know what I do on a lot of my trades? Let me tell you exactly what I do. I'll get into a trade. I want to hold on, right? That's what I'm working on in my own trading journey. It goes up. I'm like, nah, this isn't enough. Like, would I personally close on a $16 profit? No, I wouldn't. I want to make more than 16 bucks if I'm going to get into a trade. So I would be in drawdown. Now, what do you think I do when it's coming down? I'm cost averaging. That's what I do. So that means my first trade is right here. When it comes down to here, halfway through my entry candle, I would have taken another cost average trade. Potentially on this wick, depending on how fast I reacted, I could have taken a second cost average trade. As long as it what? Fits within the current pattern. There's nothing wrong with doing that. That's not overly risky. That's not crazy. That's not aggressive. That fits within my risk parameter, right? I keep my lot sizes relatively small so I can afford to do that. So now when the market comes back up and continues the pattern, at this point, I'm in a whole bunch of profit because now I'm in profit on 3 trades. All 3 trades are in profit. And I trade so many of my trades like that, me personally. Doesn't mean you have to do that. I'm just saying that that's what got me into the habit of closing so many of my trades so fast, because why not? I have a 3, 4, 5% gain. I did this for the last 2 weeks, folks, on a live account, and I made over 200% on the account, right? It was 217% in 2 weeks just doing that. Just getting in, it goes against me, cost average once, goes against me more, I'll cost average twice. When those trades get into profit, or even when only my cost average trades are in profit and my original entry is still in drawdown, I still close. And I still grow the account because I'm in an overall net profit, right? So that's one way of trading. Now, once this breaks through that line right there, boom. Now you're changing the character. That means you're changing this pattern right here. All of a sudden it's changing because now you got a lower low. And that's a signal for a potential reversal coming, where the market goes from going higher to now starts going lower, right? Looks like a Christmas tree. And that's what happened right here. It pierced through, and look, it came back up and tested it. The market loves the retest, not always, but it does. And it got rejected. This is another clear sign. This right here is not a coincidence that this candle that came through was small. Breakout candles are usually little dojis where the market was unable to bounce off that line. It came down, quickly tested to see if that's a fake out. There's no coincidence that it hit this exact same line and then got rejected. That's what that's called. It broke the line, came back, retested the exact same line, got rejected again. That's an indication that the market is changing structure and it's going to start going into a bearish movement. When some of you, this is the first time you're ever hearing some of this information. Some of you are like, wow, what is he even talking about? I didn't know any of this before, and it wasn't even that long ago. I didn't know any of this. Once people started teaching me and I started studying, I was like, wow, this makes it so clear. Now I could really see what's happening. Now I could really start to become predictive on where I think the market's going. What is this called? This is called watching the wave swell, right? This would be like, let's say you're getting ready for a buy or a sell. Let me show you the surfer analogy on this setup right here. Let's say you're getting ready for a buy or sell. So you see this clear line of support where price keeps bouncing off that line. If you let the market come to you, that means you don't get into a buy until it comes down to what? The bottom of your support, the bottom, the swing low, right? You want to get in low and sell high. Buy low, sell high, right? So that means if you were letting the market come to you, the way it would work is as you see the market come to you down here, and then it bounces up off that same line with strength. I don't know about you, But that is so amazing that a buy alert happened to appear there. Wow, look at that. Why would a buy alert appear there? Well, maybe a part of the software's intelligence is that it's recognizing what type of pattern the market's in, and it's going up and down, and the software recognizes the exact point of the swing low. And once there's a clear bounce off a swing low with strength and confidence, that may be a good time to test the buy. There's so many rules, folks, so many rules inside this software. And look at all the analysis happening, and all you have to do is just look at a word, right? It takes years for people to learn some of this stuff. We've made it so simple, right? So listen to this. Every breakout has conditions within it that our software will identify, but not every alert is a breakout, right? It's give and take. We want to generate an alert for buy or sell every time there's a potential for a breakout, but we don't ever know when that's going to happen. We don't. We have to go based on probabilities. If there is a breakout, our goal is we better make sure we capture that. So let's say, for example, there's 10 alerts and only one of those alerts was an actual breakout. Well, we want to catch all 10 potentials. We don't want to leave money on the table. We want to have a good opportunity, right? And I could show you trades where one breakout, like today, the parabolic move that US 30 made, one breakout, one, what could have made up for 10, 20, 30 losses, just one. So remember, that should encourage you that if you have 2, 3, 4 losses in a row, there's times where I have 6 losses in a row. They're small because I have good risk management, but I don't care. Okay, so I had 6 losses. I could have one win that makes up for that. I did have losses last night right before I went to bed. I closed out 2 different trades. Both of them were losses. I cost averaged on both trades. I had a total of 6 losing consecutive trades. Red, 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 red. I woke up. One good trade popped up right when I woke up. And on one trade, without cost averaging, I made more than all 6 of those losses. That's why I can go to bed with 6 losses and not care, because tomorrow's a new day. So encourage yourself. If I could do that, you could do that. Encourage yourself. You had some losses. Who cares? Try again tomorrow. You struck out. Who cares? You'll go up after the next 9 batters go up and try. Guess what? It's your turn again. Struck out again. Who cares? You'll get to go back up there again. Who cares? There's always tomorrow. You missed a trade. So what? There's going to be a million alerts that come into your phone over the next couple of years. You'll be able to take all of them, right? You don't ever feel like you missed out or you messed up or it's too late or you're too far gone. Now, this right here is what I personally would say. If you can learn to recognize what's called the swing highs and the swing lows of structure, then, that's how far you should let it go. When I hear people say, how do I know, where I should close out my trade? There's different ways to skin the cat. Okay. There's more to this than what I'm showing you, but just know that if you get in, for example, I'll show you one more thing that people do. Some traders, they like to use a very simple 1 to 2 risk to reward ratio, right? 1 to 2 risk to reward ratio. So what that means is that if this is your entry right here, what a trader will do is they will say, okay, I'm going to allow for 1 engulfing candle down to this line here. Maybe that's it. They may even come here. Why is that? Why would someone put it here versus here? What's the difference? Well, you could either choose to put your stop loss after 1 engulfing candle, where it engulfs the majority of the last candle, or you can put your stop loss down here below the last low, right there, right? Because that's a low point. And if price is all of a sudden going lower than before, meaning this was the last low, if price goes lower than that over here, well, now you know that price is definitely in a bearish move. Some people might put their stop loss there. Now, where do you put your take profit? How do you know when to get out? Here's one simple rule people do. They say, okay, I'm either going to have my stop loss there or my stop loss there, right? That's your decision. You have to do the math on what's your lot size. And if the drawdown gets to that point, if the price reaches that point, how much is that of your account? That's why you got to know some of the math. It's simple math. It's not hard. Like I literally forgot. I'm 37. I forgot how to do algebra and a lot of different types of mathematics because I haven't used it in years. I know how to do addition, subtraction, and multiplication and division. Right? I'm okay at that. And I depend on calculators a lot nowadays, right? Like many of us do. I could do the math. You could do the math. It's not hard, right? Pull out your phone or get your crosshair tool and figure it out. So now the point is this right here. If you have an entry right here, now look at the gap between your entry and your first stop loss, or your entry and the lower stop loss, right? What some traders like to do to keep things simple is they use a 1-to-2 risk to reward ratio. That means they look at this distance here or this distance here, depending on if they want a tighter stop loss or a more aggressive stop loss, and then they double that. So they would say, okay, let's double that size. That's 1 here, and they would go up 1 more above that. Or right here, they would double this. So that's 1 right here, 1 right here. So what that is, this is what this is. This is called a 1-to-2 risk to reward ratio. That means that if you're willing to lose this much right here, right? If you're willing to lose this much, then you should be willing to win double that. Why? Why do you want to win double what you're losing? So that you're taking 2 steps forward for every 1 step back. That means every time you're wrong, you lose. But when you're right, you win double. So do the math. If you win 5 out of 10 trades, what is that? You lost 5, but on every winning trade, you won twice as much. That's like winning 10, but losing 5. 2 steps forward, 1 step back. Amateur traders, they do the opposite. So an amateur trader, and chances are a lot of you are doing this, and this is why you're losing. It's because you don't understand this principle. You're taking 2 or 3 steps back for every 1 step forward. That means this is what a lot of you are doing. And I know this because I watch you guys describe how you're trading. You'll get in right here and you get scared and nervous and you close for a loss right there. Right? And you're like, okay, I just made $6. Oh, man. Whew. Oh, that was scary. But then if the trade goes against you, meaning let's say you get in right here and it starts reversing right away, you're like, oh, man. Oh, how far is it going to go? Oh, no. Oh, man. It's got to come back. Oh, gee. Oh, man. I'm in $32 of drawdown. Oh, I just got to close it for a loss. That's what a lot of you do. Right? So you were willing to close for a $6 profit, but then you were willing to let your loss go to $32. That means you're taking bigger steps backwards than what you're taking forward. Mathematically, that's not sound. You'll never grow your account like that. That means if you follow that type of strategy, that means if you're losing $32 because you're stressed out and that's how far you let it run, but you're closing at a $6 loss, that means it's going to take you 6 winning trades in a row just to make up that 1 loss. Look at how accurate you have to be now in order to grow your account. You have to be right 6 out of every 7 times. And that's why people don't make money, because they cut their wins short because they're afraid of it going against them. They're afraid of going from positive to negative, but then they let their losers run because they hope that it comes back. When a trader who knows how to make money over and over and over again, they cut their losses short because they realize where they were wrong and they had their rules in place. But when they're profiting, they have no idea how far that's going to go, and they hope that it goes as far as possible. And that's a very, very simple rule, that if you have a stop loss below your candle, like let's say here's your candle, right? Here's your candle. Let's say your candle's this big, and you say, okay, I'm going to put my stop loss down here, right? If you're going to use the engulfing candle rule, it's healthier to not do it right at the bottom of your candle, because a lot of times that price will get retested. It's if a candle closes below, right? I always tell people 125 or 150% engulfing. That means I want to see this full candle be engulfed against me plus 25% of that size or 50% of that size. That means plus about that much or about that much, right? That's a real engulfing candle. If it's just barely getting to the bottom of it, that's not really an engulfing candle. That's way too fast. And a lot of times wicks will scare you out. Look at what happened right here. Look at this wick. Right? If your stop loss is right there, it's going to take you out before you even get started to make money, right? So on me personally right here, if I was using the engulfing candle rule, I would have my stop loss about right there or even below this down there, right? Because of this low, or because I'm using the 150% engulfing candle rule based on that entry price, right? So if that's the size of your candle, you're going to have your stop loss there. And now you measure, okay, you say, okay, what's that distance between the top of the candle where I got in and then where my stop loss is at? What's that distance? And then a lot of traders, just to keep it simple, they'll say, okay, well, I'll just double that for my profit and I'll set my take profit right here. Right? So here's my risk of loss. That's how much I'm willing to lose. And I know how much of my account balance that is. And here's my win right here. Right? Now, if you, that's a very simple strategy on setting your stop loss and take profit, 1 to 2 risk to reward ratio. It's a great thing to practice. It's simple. There's better strategies than that. We're going to teach them to you. That's one simple thing to do to start practicing. Now, if you practice that, that means for every one winning trade, you win twice as much as your losses. Now, granted, there's going to be variances in that because it depends on how big those candles are, right? If you have a little tiny candle that you're getting in on, well, then double that size is nothing, right? You want to make a reasonable assessment on what's the average size of the candle that you're trading, right? That's where this crosshair tool up here in the top left corner comes in really handy. You can click on it, go to any candle and click and drag and say, okay, what's the average size of the candle, right? What's the average size? And use that to judge. Okay, I'm going to go down this many dollars on that. The average candle is about $11. Okay, I'll do an $11 stop loss or a $13 stop loss, right? And I'll do a $26 profit. Now, if you use that rule, the advantage to that is every one trade you win, you make up for 2 losses. So if you do the math, if you're only right 5 out of 10 times, if you're only right 4 out of 10 times, think about that. If you're only right 4 out of 10 times, that's a 40% winning ratio. That's pretty low for a good trader, right? Good traders are usually upwards of 55, 60, 70%. That's like you're the bomb.com. If you're over 50%, you're doing really good. Because at 40%, you could still grow your account at a 1 to 2 risk to reward ratio, because for every, if you win 4 times, that's the equivalent of what? 8 losses. Because every win is the amount of 2 losses, because every loss is half of your win. It's just math. That's all it is. That means you could be wrong 6 out of 10 times and still grow your account, because for every 4 wins, that's the equivalent to 8 losses, but you're only losing 6 out of 10, but you're winning 8 compared to 6. That means you're winning more than you're losing. You can compound your account like that. That's one really simple rule. Okay, another really simple rule, I'll show you another one here, is when I was showing you market structure, is you can also look at the swing highs, right? Everything I'm showing you, there's always an opposite to it. So check this out. The swing high is what? The tops of all of the high points. So just saying, for example, just to get through this education here with you, okay, let's say you got into a buy right here. Let's just say there was a buy alert right there under this green candle, okay? A valid exit could be what? Well, here's your stop loss. So let's show you what that actually looks like. If you got into a buy on this candle here, my pencil keeps erasing. Okay, let's say you got into a buy right there, and you put your stop loss right there, and you're saying, okay, I'm gonna use the 1 to 2 risk to reward ratio. So that's my stop loss. So now I'm gonna do double that. Oh, this is annoying. My pencil's messed up. I'm gonna do double that for my take profit, right? You just measure double the size, and you do that with your crosshair tool. It's pretty simple. So here's your stop loss, here's your entry, here's your take profit, right? That's one valid way to close your trade. And you could see that if you would have got in there, that would have hit that, right? The price did go up that high. But you can also look at your swing highs, right? You could also look at that line of what we call the range, right? The top of the range. The market's it's bullish right here. There's a bull channel, and it's coming up right here, At that point, that's about the maximum of your highest point within probability to close that trade. Meaning if you would have got in here, if it hit this point here, that's about the top of that range. How would you have recognized that? Because you could see clearly that if you draw one line skimming the tops of all the candles, you could draw one line and connect the dots. Just like that, right there, boom. That's the range right there. So if you get in here, then you could see when it comes close to that line, oh, I should close right there because it's probably going to retrace. It's not a coincidence that that is where the price actually retraced. If you look at the range that was happening at that moment, look at, you could draw one line that connects all the dots. Look at, that's not a coincidence. They're all connected. You know why they're all connected? Because the people who move the markets are using this information on when they're placing their big trades, billions of dollars, to move the market. If someone has billions of dollars, what do you think they're waiting for? You think they're just clicking a bunch of buttons and getting frustrated? No, they're like a tiger waiting in tall grass for its prey to walk by. They're waiting for the market to come to them. They're a surfer that's been patiently waiting out in the water, waiting for that swell to rise so they can go in and strike. Where do they strike? They strike at all of these pivot points, right? This is, if you're a bear, if you're like, I need to short the market, or I need to divest myself of some of my Dow Jones assets for my clients, and I have billions of dollars, they're going to wait for these points because they know that that's the highest probability where the bulls will lose confidence because they're like, yeah, we're pretty much extended to the tip of our range. This is probably where we're going to lose strength. The bears are going to say, now I'm ready to strike and I'm going to come in. It's not a coincidence that that's where the price went bearish every single time. That's not a coincidence. Right? Now, the more you practice this, if you're like, gosh, that's so hard, how do you recognize that? I one time listened to a man stand on stage and tell me that he could see these lines without those lines being there. And I was like, how? That sounds impossible. You're a freaking genius. I thought it was impossible. A year and a half later, I could do the same thing. Right? Like I saw that right now. That's why I drew the line, because I already saw it there. And I could see that's the top of the range. And so that's an area where you can also have a take profit. If you can see the top of your range or the bottom of your range, those are good points to get in or to get out of trades because it still fits within the most recent structure. Now, there's another swing high and swing low. I've been drawing diagonal lines, and on the next training, I'm going to show you horizontal lines. Okay, horizontal lines. There's horizontal supports and resistances that also play a role here. What we're going to teach you is really, really simple stuff. There's a million different indicators and candlestick patterns. We're not going to get into all of that because a lot of it is irrelevant. There are a few things, though, that are really crucial for you to know to improve your trading skills on knowing when you've been holding on to a trade for too long or to know when you cut yourself too short. There are things, right? We're going to give you every tool in the book. Now, let me show you one last thing here. Let me try to find one more. I'm going to try to show you an alert that I would personally be like, that's kind of a low quality alert. So right here, let me zoom in on this one. I'm going to actually grab my magnifier and zoom in on this. So this is probably, looking at the size of these candles, this is probably in an off period of the day where the volume wasn't high. Yeah, it was actually. So this is like at night when US 30, it's just the futures market because the market's not actually open, right? So it's just like a secondary market that has much lower volume. If I would have got this sell alert right here, let me pull out my pencil. So let me show you this. And this is the last thing I'm going to show you on this training. And then I'm going to show you, we're going to keep doing this, right? You're in class. That's why there's multiple classes so that you can learn these principles. We're recording this. Okay, if this sell alert popped up and I was sitting here watching the chart, I would not take that trade. This one right here. Nor would I have taken this one. Why not? Because look what I see. Let me erase those circles. Boom, boom. Okay, here's what I see. Out of the last 1, 2, 3, 4, 5, 6, 7, out of the last 7 candles, actually, hold on, sorry, 1, 2, 3, 4, 5, 6, 7, 8. Out of the last 8 candles, 6 of them were green. That's another thing you want to really pay attention to. When an alert pops up, right? There's a lot of things that trigger an alert. There's so many rules built into the software, but not every alert is created equal. Not every alert is backed by the same amount of volume, right? The market, we can't ever control what it does. An alert pops up because it's telling you that there are certain conditions that are met for a potential breakout happening. That doesn't mean that a breakout is guaranteed. Just because the water's starting to swell up doesn't mean there's going to be a huge wave. But there's signs that you pay attention to. Recognize the signs of the time. I wouldn't get into a sell alert where 6 of the last candles were green and they're bigger than the last red candles. You're getting, remember on the morning call, when do we close our trades? When you're getting opposite color engulfing candles. Opposite color engulfing candles. You're getting green candles here that are growing. The market is starting to trend up and find some support. If this is when we would close our trade, if you got into a sell on the market open, like if you got into a sell right here, and then you saw this green candle pop up, we would close right there. So if we would close our sell, why would we get into a sell at the same point? We wouldn't, right? Because you're seeing that most of the recent candles are in the opposite color, right? And that's pretty easy to recognize, right? You see, okay, there's a sell alert. All right, what kind of market are we in, folks? All right, I'm going to test you guys. I'm going to turn on the chat, and I'm going to test you guys. Watch this. Let's see if you guys have been paying attention.
And Sal, I'd also like to share something when you get a moment after you open the chat.
Yeah, absolutely. Let me test real quick, folks. So this sell alert came in. I want you to answer in the chat. What kind of market are we in? Are we in a ranging market or are we in a trending market? Right? Meaning before this alert came in, here's the alert popped up. So I'm talking about this, all of this activity right here. Are we in a trending market or are we in a ranging market? You go to the chat. Okay, it's a whole mixture of answers. Prior to this alert, the market was obviously very bearish. Okay, the market was obviously very bearish. That's why an alert was triggered. Now that's not the only reason why. There's a bunch of rules that trigger an alert, but the software will recognize the trend of the market. The software is not going to give you an alert that totally goes against the most recent trend. It's just not going to do that. It's not designed to do that, right? So the market was trending. However, what happened 10 minutes before that alert was generated? The market started to find some support. And that support right there, how the market started shooting up and we started getting bullish engulfing candles, I wouldn't have taken that sell because those bull candles are bigger than the last bear candles that are popping up. And now I would need even bigger bearish volume to come in, to make that a profitable trade and push it even further down. If you look at all the bear candles are really small. Look at little tiny candles here, little tiny candles there. This candle was okay at that time of day, but this bull candle was even bigger. Look at all these bear candles here. Look at all these bear candles here. Look how tiny they are. The bearish volume is so small. What are the bulls waiting for? The bulls are waiting for a little bit of bearish momentum. They're waiting for a little bit of liquidity so that they can come in and have their orders filled with some buy orders to push the volume up. The bulls need bearish strength in order for them to be able to make their move and get their orders filled. And so that's why they were waiting for these heavier bear candles to come in for them to finally come in and start to try and push that market up. And that's why a lot of people get faked out because they see this and they're like, oh, finally the red candles are getting big. Now it's really moving down. Now I'm going to get in. Now I'm going to get into my sell. And there's so many people, they always get in when the move's already over, right? They missed all of this right here but they finally see a couple of bigger candles and they're like, oh, yes, perfect. Now I'm going to place my sell right there. And that's right where it was going to go up. The bulls were waiting to pounce on you because they were waiting for that bearish strength. And what are you noticing? Number one, you're at the bottom of that channel, and look at this. This is a huge demand zone. This right here is a demand zone. Why? How? What does that mean? It means that the bulls came in heavy. There was a lot of demand at this price, and it shot the price way up. So guess what? Everyone sees that. Everyone sees what the heck happened when the price got to that point. What do you think the bulls are doing now when they're ready to go long again and go in for some buys to push the market up? Where do you think they're waiting to pounce? You think they're going to wait right here? You think they're going to wait right here? No, they're going to wait at the last demand zone right there, because that's where there's a lot of demand. That's where there's a lot of support. That's where you're going to see a reaction, right? So when I see that, I wouldn't get into that sell alert at all. Even though, yeah, an alert popped up, I don't just blindly get in. I make an assessment. I'm like, okay, there's a sell alert, but we've been getting some support. All of the bear candles prior to that little bit of movement are really small. We're not that far away from this amazing demand area where the market's about to shoot way up. I'm not going to touch that alert, right? So that's one simple thing that I do to disqualify alerts. And here's the last thing I'm going to say. I'm going to pass the call to Coach Mo, because he and I we've been trading together for years, folks, listen to me. I feel like I sound like Joe Biden there. Folks, listen to me. I don't want to sound like Joe Biden. I'm being serious here. Many of you are over trading. That means you're taking way too many trades. You don't need to take them. You should just ask yourself, how many trades do I need to take to at least start making a couple $100 a month per month? Why? Well, because that's the cost of the program. You want to at least get to a point where you can cover the cost, right? Some of you are trying to make $200 an hour. And so you're just jumping into every alert, just pushing the button, frustrating yourself. Again, that's like a surfer. You're just paddling, trying to create the wave yourself. No, we're giving you professional analysis tools to be patient, allow the market to come to you, pay attention to what's happening in the most recent period. Look at the swing highs, look at the swing lows, look at, zoom out a little bit, look at the big picture, what's going on with these candles. A lot of you already have some knowledge on engulfing candles and what impulsive moves look like. Right? A lot of you are starting to understand some of those things. Pay attention to those things before jumping into an alert. And when it looks right and you're like, oh man, it's building momentum. I like it. Wow, I got a buy alert and we're starting to get some serious green candles. Boom, I'm going to jump in. It feels good. If it doesn't feel good, there's no reason to get in. You don't need to jump in every alert. Get into the ones that look like they're set up, but make sure you have a plan that explains to your own brain why it looks like it's a good setup. If you can't explain it, then that means you don't understand it, right? I'm not saying you need to go and create all these trend lines and support and resistance and ranges. And I'm not talking about that. I'm saying if you can't explain why you chose to get into a trade, then that means you don't understand why you got in and you're playing with fire. Trading is risky. You have to respect the market. You have to respect your money. This is a real skill set here. This is not child's play, right? So you need to have a little bit of knowledge under your belt. I mean, gosh, imagine people text me, Sal, I'm just following the alerts and I'm losing. What do you think I think of when they tell me that? Really, you're just following the alerts, huh? You know what that really means? It means you're just blindly jumping in without any knowledge, without any understanding of how trading works, and you're just going rogue and just risking your whole account, right? And that is why, right there, that is why 95% of people lose money in trading, because they don't want to learn, or they don't take the time to make things disciplined, or things have been too complicated for them. We're here to change those statistics. With that being said, I'm going to pass the call back over to Coach Mo. I know Coach Mo's been watching and listening. He has incredible insight on analysis. And go ahead. Do you want to share your screen, Coach
Yeah,
Mo?
please go ahead and let me share my screen.
Okay, you are co-host. So if you want to share, I'll go ahead and stop sharing there. Go ahead and share your screen.
Okay, so I'm just going to share a screen so you guys can see how to calculate, because a lot of you do not have the close all feature yet, because that comes with your, when you purchase the product. You don't have the ability to see what percentage you're in drawdown or in profit, or how much money you are in profit or in drawdown based on the account. So what I'm going to do is I'm going to take a trade here. This is on a demo account. It's just a fake account, just to show you how you can see very easily how to place your stop and see what your stop is at based on your account size. So let's say this account size is like, let's say 5,000, right? So for instance, if you're doing a $5,000, or let's say a 1,000, let's turn it back. Let's say this is a $1,000 account to keep it very simple. So this is a $1,000 account, and let's pretend this was a sell signal. So it said sell here. So I'm going to press sell, okay? And you can see that the sell just came in. Now, what you could do is you just click on that little line that you see, that little green line where your sell is in, and you drag it, you click on it, and I'm going to show you exactly how to do it. You click on it and you just drag it up, right? Now, this is where your stop is. So based on Sal talking where, what he was just speaking about, you might say to yourself, okay, I want to set the stop, let's say above right here, so that if it comes up to this level, I'm getting out. Well, all you need to do to figure out how much that is put your little mouse over here, and it says $11, negative $11.86. So you know right there that you're risking before you really get into the trade. I mean, you're in the trade, but you know that at that point you're risking $11.86. So if you're saying to yourself, well, $11.86 for me is a little too much at that point. So you know what? Instead of you putting it back that high or that far, you could click it again and drag it down and just put it above this group of little candles right there. So you say, okay, I'm going to leave it right there. So if it goes up against me and it breaks this market structure, which Sal was talking about, and it breaks this little structure of these candles that are on the left here, how much would I be risking? Okay, let me look. Oh, wow, $7.41. At $7.41, I can handle that. It's not going to cause me to be super emotional. I'm not going to be like, oh my gosh, I lost $7.41 on this trade. Okay, so at that point, you say, I'm willing to risk that. Now, the next thing you got to look at is if you're willing to risk that, you can take the same, click on the same trade and drag it down, right? Because you're because you placed a sell. So you're going to click on that, left click, drag it down, and that's your take profit. So now you could see, okay, if I'm willing to risk $7.41, if it goes against me, that's my stop loss. Well, what am I willing to, where do I want this to go to, like what Sal was saying, to have a 2-to-1 ratio. So I need to make sure that I'm at $14 to be in profit so that I keep that ratio correct. So at this point, you click on here, it says it's $26. Okay, so you know what? I'm going to drag it up. I'm going to put it right here. And you could look on the left, it says it's at $17.88 in profit. As I'm dragging it up, it's going to say I'm at $15.95 profit. So when I'm at, let's say, $14.60, that's it right there. So now if I put my mouse on there, there it is, $14.60. So if this comes down to here, I made $14.60. If it goes against me, I've lost $7.41. Now, let's say you were doing a cost average, right? Well, you got to figure out, because you don't have this tool at the top here, you got to figure out if you're in 2 trades. So I'm going to place a second trade. I just placed a second trade. Now, you got to figure out that if you're going to drag another stop up here, you got to add these 2 stops together to come up with your total risk, because there's 2 trades that are live right now, right? On a demo account, on this demo account. So that means that if I add these up, I've got this one at 690 and this one at 740. So that's basically, let's say $14, which means that my next 2 trades, we want to put at this, right here. So there you go. So based on this example, now I know that if both of my trades I lose, I'm going to lose $14 in total. If both of my trades I win, I'm going to make $28 in total. And that's how simple it is to see what your profit or what your risk is without having this tool yet. because right now you can see in real time that this is at a point one, let's say drawdown or whatever, based on this account size. But we're going to ignore that for now, because what we're looking at is what you have access to be able to tell based on your stops and where your take profit is. Now, if you say, look, I want to take profit, there it is. It just stopped me out. So at that point, I lost $14 on this one trade, but that was able, that's doable. That's not a big deal. Depending on your account size, you say, okay, I was willing to take a $14 loss. No big deal. I know that my strategy, I make on an average a 2-to-1 win, risk to reward, or 3-to-1 or 5-to-1. And that's how you realize that, hey, like Sal said, he took 6 losses in a row, and with one trade, he made up on that. So for him, those 6 losses were so small, it's not even a big deal. So I just wanted to share with you a real example using the actual tool that you have access to, the MT4, on how to set your little stop loss, see what you're risking at that moment, and then saying to yourself, okay, I'm not willing to watch this go against me. Like, think about it. If I didn't put that stop loss and I'm in this trade right now, I'm like, well, I hope it's going to come back. It may come back and it may win. I'm glad I had that stop loss. And I know that I was willing to risk $14 on this trade. But most of you that are not yet proficient in trading, and you're just a novice or inexperienced, you don't have a stop loss, whether it's a mental stop loss saying, hey, I know that if it gets to this point, I'm out, or a physical stop loss. You didn't physically do it, which is so simple. Again, I'm just going to show you a simple way to set your stop loss. You just go here, and if it's on a sell, you click on it and you drag it up, right? Now I'm going to close the trade. If it's on a buy, you click the buy, and then to put the stop loss, you click on it and you drag it down, right? So the stop loss is right here. I can see right now, what's that stop loss at? It's at $8. Okay, I feel comfortable with that. You need to know on every trade what your risk is if it goes against you. You cannot control where the market goes, but you can control how much you're willing to lose on that particular trade. It's better to take a lot of little losses than to literally not have a stop. And if this market goes against you this far, what would you be willing to risk? Look at that. That's $45. If that's too much, why wouldn't you have a plan going in on this? So most people do not have a mental stop or a physical stop. So guess what? When it starts going against them, now they're in $45 drawdown, $60, $100, $200. Now they're like, man, what do I do now? Oh man, hopefully it comes back. And then the market's trending down and it's not coming back. And it's just all of a sudden you're like, all right, that's it. I'm going to take the loss, 20%. And people take a 20% loss, 30% loss when they didn't have to. They could have taken that 1%, 1.5% right at the top here. That one little candle. Because if you got into this one candle right here, you may say, okay, I'm going to do, like Sal said, 1.5 candles, which is about 150%. So at that point, that's where your stop would be of that buy. It'd be that one candle plus about 50%. So that would be a total of $7.83. That's how you should be getting into every trade. You're like, all right, 1.5 candles, or the swing low, which is doable. It's not going to cause me to be emotional if I lose this trade, and that's it. And you lose that 1%, that 0.5%, that 1.5% loss, not a big deal. But if you're not setting your stops mentally or physically, then when it goes against you, what do I do now? Now I'm in a 2% drawdown, 5%, 10%. Oh my gosh, if I close it now, that's way too much of a close. I hope it comes back. It doesn't come back, and you're in a 20%, 30%, and that's how people blow their account. And they go through this boom and bust cycle, which easily could have been avoided because all you had to do is put a little stop loss there at 1% or 2%. So with that being said, I don't want to drag this training on too long because Sal has shared tremendous amount of value from a perspective and a mindset of what a professional trader thinks like. And we are giving you the tools. We do care for you. We do want to share this with love because we know how this could potentially change people's lives. And we don't want people to sabotage themselves. And the only reason they're sabotaging themselves is because they're risking more than what they're willing to lose. And if they're not comfortable losing $100 on a trade, then they should never put themselves in a position, and they should make sure they keep their stops very small, about $7, $8, $10, and that's it. Because why? Because then that is something that you feel comfortable with. So if you take a few trades that are losses of $5, $10, $20, and you add them up, it's 5 losses is like 40, $50, not a big deal, because one trade could potentially be a $30, $40, $50 win. And so I just wanted to share that perspective with you. Sal, you did a phenomenal job, especially opening this call and getting people focused on the right things, the right mindset, really counting and understanding that this is not something that you need to look at, oh, okay, I've traded here for 3 or 4 days and I'm going to judge the whole system, the whole platform in 3 to 4 days or a week or 2 weeks. And you don't want to do that because you're going to shortchange yourself. You're going to affect your ability to really potentially win big here because of a few days or a week. Understand this. We brought this to longevity after 9 months of going through it every single day, 4 to 5 hours a day. Then longevity had to vet this whole strategy out, from the open strategy to the scalper strategy to all this stuff for months. You think they would take on a product and a program and a system that is going to cause more losing than winning? Absolutely not. But again, it's not the basketball. It's not the hoop. It's not the court's problem. It's not the alerts. It's not the open. It's us individually. And so trading is going to be able to, if you take it serious, help you build character, not just in trading, but in your life, because you're going to learn discipline. You're going to learn how to control your emotions. And that can translate into any area of your life, whether it's relationships, whether it's business deals, whether it's anything. So this trading and this training that you're getting is bigger than just making a profit at a point in time. It's literally going to be able to shape how you see the world and how you see life and how you see business, because it's going to help you mature in business, in life, and even in yourself, in your relationships, because we offer a lot more value than just clicking a button and making a profit. We offer so much value just on life. And if you become a better person, you become a better trader. It's just the way it is. And if you become a better trader, you become a better person, because it's all linked. Because at the end of the day, it's your emotions. It's your ability to assess what you're looking at. It's your ability to follow directions. It's your ability to be disciplined. And understand this. I was just talking to somebody about this today. Why do we stress playing on demo? And why do I still trade demo? Why does Sal sometimes still trade demo? Because a basketball team or a football team or a soccer team plays one game, a real game, every week or every 2 weeks, but yet they practice 4 or 5 days a week. So practice is so important. Imagine somebody saying, look, I don't need to practice every day. We're a team. We're going to get together. We know how to play. We've been playing football for 10 years. I've been playing since I was a kid. I don't need to practice. All I need to do is just play the game. We know how the game works. We know all the rules. But why does the team still get together? Why do they still practice 5 days a week, and then they play the real game once a week or twice a week? Because it takes practice. You can't just go out and play the game and think you know. Professional football players still practice 5 days a week, 4 days a week. They practice for months before they actually go back to playing football. And these are professionals that have been playing for 10 years, 20 years as a professional, as a college students, and yet they still practice. You can't shortchange success. So I say all that because I want you to understand there's tremendous value that we're offering besides just clicking a button, besides just an alert that says buy or sell. It literally can change your life. And so I'm just grateful to be here. We're here to serve. We're here to love you through this. We're here to believe in you before you believe in yourself. We're here to really encourage you and inspire you to really make the right decisions potentially at the right time, and help you learn what to do and what not to do so you don't sabotage yourself. So thank you so much for being on the call. I'm going to pass it over to Sal if he has any final words. And so, yeah, just watch the replay, share this with your teams, share this with your people so they can get tremendous amount of value, because there was a lot of value. This is probably one of our better, I think, trainings, because it's really going to get your mind right and show you how simple this really is. Trading is extremely simple, but it's not easy, because it's literally you versus yourself. It's not you versus the market. It's not you versus the banks. It's you versus yourself. And if you can overcome your own fears, your own greed, your own insecurities, then you could potentially become a very successful individual and potentially become a successful trader. So that's what we hope for everyone that's here. God bless you. And I'm just going to stop the share, and I'm going to go ahead and pass it back over to you, Sal.
Awesome. Thank you so much, Coach Mo. That's a mic drop moment for sure. Here's what I would say. This is so worth it. I mean, think about this. We've been doing all of this for free, right? We haven't even launched yet. Why? Like, why would we be willing to spend all this time with people for free? Because it's for your benefit. And it's so powerful. The benefit is so big that that's good enough for us to be witnesses of that. That's how huge this is going to be. This is going to be massive. And we can't wait. Like, we're right here. We got our popcorn ready. We're so excited to turn the show on and to watch what's going to happen with a lot of your guys' journeys. It's so worth it. And so, just be patient with yourself. We say that all the time. Slow down. Understand that we're going to teach you everything we know. This has already changed our lives. It's changed the lives of our beta group. And we said, gosh, this is amazing. Let's open this up and let's help everyone get access to this incredible information. I can tell you this. We are going to teach you guys some crazy, amazing things that you've never seen before. I promise. You've never even seen it before in trading. There's things that, we can't turn on the fire hydrant, right? And just blast it all on into your face. We're going to eat a whole elephant one bite at a time. We gotta spoon feed the process. Right now, we're just building the foundation. That's why today we spent some time going over your commitment level, because some people were getting frustrated and they're trying to force things to happen and they're getting themselves worked up. And you're going too fast, right? You are getting ahead of yourself if you're getting frustrated already. You're in the learning phase. You're in the practice phase. And this is going to be an amazing journey that's very well worth it, but it is going to take some time, and you're not going to be, the superstar in month number 1. So don't trade like that. Don't trade like you think you're going to be the superstar, because that's the fastest way to crash, right? And that's why, a lot of people stay away from these markets, because they don't know if they can overcome themselves. But we have a lot of emphasis on psychology, a lot of training, a lot of personal growth that we're intertwining with our program, so that you transform from the inside out, you execute better decisions. And yes, we have some automation coming with exiting trades. We have tools like the trade manager. There's so many other instruments that you're going to have on your charts, where you'll have alerts that come in at all hours of the day, and you'll be able to cherry pick the very best alerts that just feel amazing. You're going to have people on your team crushing it. We've already seen so many people that are doing good right now, and they're doing better than they ever have before in trading. And we're like, this is it. Wow, we're just getting started and people are already there. We've seen people do this for years, and it changes their life forever, as it has done ours. So folks, thank you very much for joining us live. We'll get the recording out as soon as possible. We will be doing a guest overview this week for new people that have not seen an actual presentation yet. And stay on the lookout for some really exciting announcements about the next phase of our launch as we wind up for our big countdown to go into a really incredible launch to go out there and change the world. God bless you guys. Have a great rest of the night, and we will hear from you next time. Thank you. Thank you all for your time.